Okay, and what's probably the final video for chapter 2. We're going to go through the rest of the transactions. I've already recorded the 2 that we did in prior videos. We have our debit to cash for this first transaction and a credit to common stock. We have our debit to land and our credit to cash. Now, you might notice that I flipped them around. It is not incorrect to do it this way. As long as your debits and credits equal, it does not matter which one comes first. But I will tell you, in the accounting world, pretty much everybody puts their debits first. That's just a habit, but it is not wrong. As long as you have debited and credited the correct accounts for the correct amounts, it is perfectly okay to put credits for debits or in any order that you want them to be in, as long as you are debiting the right account and crediting the right account for the right amount. So the other thing I did was I took our answers from the first chapter, because if you notice the transactions are all the same, and I showed, okay, this is how it was recorded, how we were doing it before, just in kind of spreadsheet plus and minus mode. And now we're going to basically convert this, because all the transactions, I believe, are exactly the same last time I checked. We're going to just kind of convert these to journalizing them rather than pluses and minuses. And journalizing is the method we're using from this point forward. So C, transaction C says net solutions purchase supplies on account for $1,350. Over here, we see we increased supplies by $1,350 and we increased accounts payable by $1,350. So supplies is an asset account. And I don't expect you to be as fast as I am at this, yet. An asset account, an asset is normal balance is a debit. It is increased with a debit. So my debit supplies for $1,350. Accounts payable also goes up, but it is a liability. Liability's normal balance is a credit, so it is increased with a credit. So I credit accounts payable for $1,350. Transaction D, net solutions received cash of $7,500 from customers for services provided. So I received money, and so that would be cash. We received it, so that means it went up, and it's an asset, and I increase an asset with a debit. And it's a revenue, and they earn, and their revenue account is called fees earned. Revenue account goes up with a credit, and I earned this money, so it's an increase, $7,500. You can see that's what we did over here too. There's my increase for fees earned and my increase for cash. Next transaction. Says that this is a one with multiple expenses. Net solutions incur the following expenses: wages, $21.25, rent of $800, utilities of $450, and miscellaneous of $275. So I do have to separate those out into their individual accounts. This is transaction E. So I have wages expense, rent expense, utilities expense, miscellaneous expense. And these are expense accounts, and I am incurring these costs, therefore my expenses are increasing. Expenses increased with a debit. So I'm going to debit all these accounts for their respective amounts: $20.25, $100, $50, and $275. It says we incurred the following expenses. Really should say that they paid them too, honestly. It doesn't really, it's not as clear as it should be, but we're going to make the assumption they paid them because that's how they record it. So I'm going to credit cash for the total. I'm just going to sum them with the sum function. I can confirm my debits equal my credits by highlighting here. $36.50, obviously that's $36.50, so I balance. Transaction F says that I paid creditors on account $950. Okay, so first thing, that word paid means I used cash, but I paid somebody else, so cash goes down. So I credit cash for $950. And the creditor is somebody that I owed money to. So I need to have a liability here, because if I owed them money, that means there was a liability that I owed money to. I decreased my liability, which you can see we did right here. It was $950. It was $1,350. We reduced it by $950. So, and to decrease a liability account, it is a debit. So I'm going to debit account payable for $950. Okay. Transaction G says net solutions determines the cost of supplies on hand was $550. So this is the one that was kind of weird because we had supplies. You got into the balance in the account in order to do this. So it says that 550 is what we have left, which means we've used up all but 550. So what I need to do this journal entry for is not 550, but instead how much I used. Well, I can go over here to my supplies and look. You see that my supplies balance is $1350. So if I only have $550 left, $1350 is what I started with, and $550, so it'd be my beginning balance, beginning inventory. This would be my ending balance. To figure out how much I used, I can just subtract one from the other. I mean, I also have it already over there in that spreadsheet, but 800 is what we use. So that is going to be the amount that I used for my transaction. Notice too, I'm skipping a line that you don't have to do that necessarily, but it certainly makes it easier to read, just because they all run together if you don't. It's not necessarily required. I skip lines to make it easier to read. So I no longer have $800 worth of supplies, so I need to reduce supplies. Supplies is an asset, so to reduce supplies or decrease supplies, I would credit that account. And supplies expense, I would want to increase an expense account. I increase an expense account with a debit. So I'm going to debit supplies expense for 800. And the last transaction, transaction H. All right, so we got paid dividends of $2,000. So first I in cash, because I paid, goes down. I decrease an asset with a credit. And dividends increases with a debit. 2,000 and 2,000. That's it for journal entries. I might have misspoke earlier and said that this was it for the chapter. It's not it for the chapter, but it is it for the debit and credit rules and all for the journal entries. And we will move on from there.